Hi Al, how's everybody doing? Good morning. Taking a look real quick at what happened over overnight, and pretty much we had that news spike going into or coming off of the Australian employment report, and it did come right back in, and right around that area where we thought we might get some support with the coming back to this line that was zoomed. We did pretty much do that, and it didn't happen until the moving average caught up with the line. You could have bought it right here, um, but the main problem with that is not necessarily the moving average was so far away, but where did you have to put your stop if you wanted to make sure you weren't going to get busted out on some noise, and that was all the way down here, and that's risking something like 40 40 plus pips, and that's for something that's trading about 80-ish pips a day. It's a little rich for my blood. Um, However, now what we did have since then is after this spike up, and again this frequency is working wonderfully, we pull back and we get another chance at that exact same level. And I like these bars. They've got these little, zoom in a little bit, kind of wicks down through here through this frequency. You could hang your stop. Let's get rid of this. We're talking about buying in here, something like that. At 04, well, this is a swing low now. Put your stop about 5-6 pips below that. Now you're talking about risking 15, and more than likely we'll get back up here to 50 or so again at least, probably expecting more than that, because we still got a lot of room to work with in here. More than likely expect another high, maybe come up and touch this this next upsloping frequency. That seems pretty reliable. Looking at the daily again, we've zoomed, we've come back into the same number, and we're still working our way towards this median up here. So it depending on how you take the trade, you could try to work this thing below swing highs, assuming you don't get in too big of a hurry when we have these kind of pauses for news like in here. The swing highs have been protecting you, or sorry, the swing lows have been protecting you if you've been hiding your stops underneath them. But if you get in too big of a hurry and you go kind of for like this unconfirmed one, this double fake out double top looking thing, and you try and hide under there, they might have gotten you here while you were just sitting there waiting for news to come out. All right. So is there a trade now? Yeah, I think I wouldn't have a problem with still sitting here with my hand out at around 10 or so with a stop around 90. That's risking 20 pips to work this thing up probably around to 95 or so. That's a good 90 pips. You'd probably have to hold it through. To get that much range, you'd probably have to hold it through New York close. Because if you look at the daily again, this is our average true range, 20-day average true range, and if we expect to get a move that's greater than this, that means we're going to have to hold on for more than one daily bar, and the bars print at 5 o'clock, I believe, Eastern time. Alright, so that's Aussie dollar, and we like the way that keeps on rocking up. What's going on in the rest of the world? How about some equities? Drew did this little quick and dirty on the SPY, and here you notice I wrote the note expanding pivots. Well, that's exactly what we have. If you notice that we're making lower lows and we're making higher highs, you get this big megaphone looking kind of pattern. It can be really tricky to trade, so be careful. Plus, we're definitely just in a big range. This whole thing is, kind of marked out the lows, and this is where we found support. And again, right around these old highs, after washing them out a couple of times, um, we came down and took the stops out on the other side. So yeah, kind of a nasty, yucky pattern. One of my teachers though does uh, basically make a living off of this thing. Kevin Haggerty, this is his deal. Anytime you see expanding pivots, he's in there expecting this wash and rinse type of pattern, and he'll be in here on like a 5-minute chart looking for a little bar to buy into to try and catch a move like this. But he's a day trader, um, and most of his entries will be right around now in the first hour of the New York session. Okay, so what's going to happen with this thing? I don't know. Maybe we go out and take the highs again and make another expanding pivot. We'll see. Yen, dollar yen. This is a 4-hour chart of the dollar yen, and I haven't had a good feel for what's been going on in the yen for a while now. We're zooming out all the way back to last year. We are doing something like this, looks like we're working on some kind of multi-pivot line here. Get this thing to draw for us. And we've been testing this other side of this line for, the better part of, all year actually. Very rangy. We are, however, if we take a closer look, and let's get rid of some of this stuff because it's really just distracting for what's important. Let's see if we can get rid of that Fibonacci. Yeah. Okay, zooming in a bit, you'll notice that we came down and made this low, and then after chewing on this range for all of February and then washing these guys out, we came up and finally took out this high. Didn't last very long, but we did knock it out. Then we came back to support again, and now we've made another higher high, and we took this guy out. So, actually this could be an interesting area to buy the yen now that I think about it. I don't really like the way this thing has come in, but that's sort of what it's been doing this whole time. But we are getting this slow, reluctant pattern of higher highs, and this would be a really small stop on a 4-hour chart. This is, if we got a retest of this line, buying at 101.47, and then putting a stop at something like 101. That's for a 4-hour chart. That's under 50 pips. That's really small, because you would be expecting for this thing to come up probably back into these old highs up at 105. So that's something interesting to think about. And if you get knocked out, you risked 40 pips. So long as you're not betting your whole account on that, then I think that's pretty reasonable. Let's see what this looks like. Yeah, this is what I had drawn in. I'm not a real big fan of that kind of price action, but it seems, I don't know a whole lot about this pitchfork yet. It's just something that kind of caught my eye, so I drew it in there. Does seem to be working on this side, and then kind of coiled around it here, zoom. We're just sort of playing around on both sides of it. I would think that the structure in the multi-pivot line is probably more important than anything else. We also have this long-term action-reaction line. This looks kind of center-ish to me. Throw a line on top, throw it down on the bottom, a copy of it equal distance down the bottom, and sure enough we're playing with it. You missed the center a little bit by up here, but now maybe we slopped a little bit over it by it over here. So yeah, I don't know, I'd say it's pretty reasonable. Let's keep an eye on this. Let's say we get in at the fill at 50, and we put our stop at down here at 101 even, and see whether we get anything out of that. I would say the plan would be to go back up to this frequency and these highs. So I would worry working a limit order to get out of the trade. The target up here. And that is 400 pips for risking 50. That's a nice risk to reward. That's so a pretty good possibility there. Let's see what else. Canada. Yeah, I drew this downsloping median line. I like the way it keeps playing with the handle on it here. I think that if we tested it one more time over here in the next couple of days, maybe it might be worth a try with a really smallish stop, selling the backside of this median and looking to take it to the next line down. That would be a really nice tight risk-reward trade. Your stop, unless we built another one, would really need to go up here, but that's probably, let's see, that would be, let's just take a look at it. If we got into something like that in a few days, or maybe next week, and then we took out, if we had to put our stop all the way up here, that's looking a little big. What is that? The good, yeah, 60, 70 pips, which isn't unreasonable on a 4-hour chart, especially when you're talking about trying to capture coming down here. But maybe we get something in here that lets us have a tighter stop. That would be nice. If we get a little bump, some little extra structure, a nice little, you can tell how this 20-period moving exponential moving average has been cupping price. Maybe we get a little fake out through it. Anyways, an entry there would be over, and if we made it all the way down to the lower median parallel, would be really nice. That would be over 200 pips. Especially if we could get our stop down to something like that, where we would only be risking 40-ish. I'd like that. Okay, well, this was just a quick one this morning. Got to get some breakfast in the family. I'll post up a time for when we're going to come back, probably in a little bit later today, to talk about some techniques and things rather than specifically looking at markets. Okay, take it easy.